Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index slipped to a 6-week low of 97.43 last week, tracking a drop in short-term treasury yields. Markets were rattled by signs of deeper weakness in the labour market as just 22,000 jobs were added in August, far below the 75,000 expected. Weak data aligned with dovish remarks from Fed officials reinforcing expectations that the central bank will restart its rate cutting cycle this month, with markets now pricing in 3 cuts before year end. WTI crude, the US benchmark, posted its third straight daily loss on Friday, tumbling more than 2% to settle at $61.70 a barrel. The week closed with a decline of over 3%, the first weekly drop in 3 weeks. The slide followed a surprise build in US crude inventories of 2.4 million barrels, just as OPEC Plus prepares to meet. A report suggests Saudi Arabia is pushing for higher production to regain market share, potentially unwinding part of the current 1.65 million barrel per day cuts. Gold surged more than 4% last week, notching its strongest weekly gain since April and setting a record high above $3,600 an ounce. The rally was fueled by weak US jobs data, which boosted bets on Federal Reserve rate cuts. Beyond the rate outlook, investors are flocking to gold as a hedge against political risk, concerns over the Fed's independence, and lingering inflation pressures. Add in global trade tensions and growing geopolitical uncertainty, and the safe haven appeal of bullion looks stronger than ever. Dollar yen swung lower last week, falling to as low as 146.80 before recovering to close near 147.40. The dollar's weakness was compounded by a rise in the US jobless rate, which now stands at 4.3%. Meanwhile, Japan's cash earnings jumped to a 7-month high in July, but the yen largely ignored the data. With Prime Minister Shigeru Ishiba announcing his resignation, political uncertainty has also entered the mix. The euro climbed above 1.17 to reach 1.1760, its strongest level since late July. The rally came as the dollar weakened across the board after the latest US jobs report highlighted a cooling labour market and fueled bets on Fed rate cuts. Attention turns to the European Central Bank meeting next week, where policymakers are likely to hold rates steady amid stable growth prospects and inflation close to target.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.